Welcome back to the second half of Practical Accounting class. Over the next 8 weeks, we will use practical examples to apply the fundamental accounting concepts we learned in the first half of class. One of the first steps a business owner takes to start a new business is to open a bank account. Even for very small companies, personal transactions should be kept separate from the business transactions. So, personal bank accounts should not be used for the business. Pause the PowerPoint now and for each of the next 4 slides and read each of the slides. As you read in the previous slide, one person should be designated to prepare the monthly bank reconciliation. A bank reconciliation, or bank rec, is simply comparing the record of transactions and current balance according to the bank statement to the company transactions and the company's current balance. You may have a personal bank account and you may balance your checkbook, which is just another way of saying a bank reconciliation. Some customers will just compare the transactions using online access to their bank account to ensure that the bank's records match their personal records. In business, however, it's necessary to provide a written reconciliation on a monthly basis. Pause the PowerPoint here and read the next 3 slides. There are 5 steps to reconcile the bank statement to the company records. The bank statement shows the check number, the check amount, and when the check was cashed by the bank. This is also called cleared by the bank. In step 1, check off each item on the bank statement that matches the checks posted to the company's ledger or journal of transactions. Step 2, deposits. Check off each of the deposits that appear on the bank statement that match the deposits on the company records. If deposits made at the end of the month by the company are not listed on the bank statements, these are called deposits in transit, and they represent part of the difference between the bank and the book balance. Step 3, outstanding checks. Any checks that have not been marked off as matching the bank statement cleared checks will be called outstanding checks. These also represent part of the difference between the bank and the book balance. Step 4. Record memo entries that appear on the bank statement. There can be debit or credit memos on the bank statement. For example, a bank service charge may appear on your monthly bank statement. If this has not already been included in the company books, then the transaction should be entered to record the expense. Step 5. The bank statement adjusted balance must match the company book's adjusted balance. You can use a bank reconciliation template or accounting software to compare the adjusted balances and investigate why there is a difference. Until this is completed, financial information should not be relied upon. Once the difference is found and explained, and any related transactions are posted to the books, the reconciliation is complete. Go back to the module for this week and see the assignment so you can practice preparing a bank reconciliation.